Welcome to Redwood Capital Solutions LLC. Today, we're diving into a crucial topic for small business owners: optimizing your business structure. Specifically, we'll explore the transition from a sole proprietorship to a limited liability company, LLC. This shift can have significant benefits for your business, offering greater protection, flexibility, and growth potential. Let's delve into the details with facts and figures to guide you through this important decision. 1. Understanding the sole proprietorship. Sole proprietorship is the simplest form of business structure, owned and operated by a single individual. While easy to establish and manage, sole proprietorships lack legal separation between the owner and the business, exposing personal assets to business liabilities. According to the U.S. Small Business Administration, over 70% of businesses in the United States are structured as sole proprietorships. 2. Benefits of transitioning to an LLC. Limited liability protection. One of the primary advantages of an LLC is the separation of personal and business liabilities. This shields your personal assets from lawsuits or debts incurred by the business. Tax flexibility. LLCs offer tax flexibility, allowing owners to choose between pass-through taxation or corporate taxation, depending on what aligns best with their financial goals. Credibility and professionalism. Operating as an LLC can enhance your business's credibility and professionalism in the eyes of clients, partners, and investors. Perpetual existence. Unlike sole proprietorships, which may cease to exist upon the owner's death, an LLC has perpetual existence, providing stability and continuity. Operational flexibility. LLCs offer greater flexibility in management structure, ownership arrangements, and decision-making processes, accommodating the evolving needs and goals of your business. 3. Steps to transition from sole proprietorship to LLC. Research and planning. Begin by researching the legal and regulatory requirements for forming an LLC in your state. Each state has its own rules and procedures, so it's essential to familiarize yourself with the specific requirements applicable to your jurisdiction. Evaluate the potential benefits and drawbacks of transitioning to an LLC based on your business's specific circumstances and future goals. Consider consulting with legal and financial advisors to assess the implications and make informed decisions. Choose a name and registered agent. Select a unique business name for your LLC that complies with state regulations. Ensure the chosen name reflects your brand identity and is not already in use by another entity. Designate a registered agent who will receive legal documents and correspondence on behalf of the LLC. The registered agent must have a physical address in the state where the LLC is registered. File Articles of Organization. Prepare and file the Articles of Organization with the appropriate state authority. This document officially establishes your LLC and outlines its operating parameters, including its name, address, purpose, management structure, and duration, if applicable. Pay the necessary filing fees, which vary by state but typically range from $50 to $500. Be sure to include any required additional documents or disclosures as specified by your state's laws. Create an operating agreement. Draft an operating agreement that outlines the internal workings of your LLC, including ownership structure, management responsibilities, profit-sharing arrangements, and dispute resolution procedures. Although not always required by law, an operating agreement is essential for clarifying expectations and minimizing potential conflicts among members. Work closely with legal counsel to ensure that the operating agreement reflects your business's unique needs and goals and complies with state laws governing LLCs. Obtain necessary licenses and permits. Ensure compliance with local, state, and federal licensing requirements applicable to your business activities. Failure to obtain required permits could result in fines or legal penalties, jeopardizing the success and viability of your LLC. 4. Cost considerations. While transitioning to an LLC offers numerous benefits, it's essential to consider the associated costs and financial implications. In addition to filing fees, budget for ongoing expenses such as annual report filings, registered agent fees, and tax preparation services. These costs may vary depending on your state's requirements and the complexity of your business operations. Despite these costs, the long-term advantages of operating as an LLC often outweigh the initial investment, especially in terms of asset protection, tax savings, and operational flexibility. View the transition as a strategic investment in the future success and sustainability of your business. 5. Real-world examples and success stories. Share real-world examples of businesses that successfully transitioned from sole proprietorships to LLCs and experienced tangible benefits such as increased credibility, legal protection, and growth opportunities. Highlight specific strategies and best practices adopted by these businesses to navigate the transition process effectively and maximize the advantages of their new business structure. Emphasize the importance of careful planning, thorough research, and proactive management to ensure a seamless transition and long-term success. Conclusion: transitioning from a sole proprietorship to an LLC is a pivotal step for many small business owners seeking enhanced protection, flexibility, and growth potential. By understanding the benefits, following the necessary steps, and leveraging real-world examples, you can optimize your business structure and position your company for long-term success. Remember, informed decision-making and strategic planning are key to unlocking the full potential of your business. Thank you for joining us today at Redwood Capital Solutions LLC. Stay tuned for more insights and guidance to empower your entrepreneurial journey.